We're talking indicators today, and we're talking weak markets. We're going to tell you about one indicator, only one, that you should be using when the market starts to sell off. Guys, here's what we're going to talk about. Volatility and lower prices. The relation between those two, you will be a little bit surprised about. And can we, in some way, spot these volatility spikes before they actually happen? And obviously, what do we do? Where do we hide during higher volatility and lower prices in the overall market? Today, we're going to talk about the VIX, guys. The VXX is the ETF. And I'm going to show you the definition here if we can jump to this real quick. There we go. The CBOE Volatility Index, or VIX, as we like to call it, is a real-time market index representing the market's expectation for volatility in a 30-day period. So we always talk about the market goes up like an escalator and then down like an elevator, guys. So when we get those pullbacks, typically they are on higher volatility and higher volume. Let's talk about why that is.
Yeah, traders want to hedge and buy those puts, and then that's one of the things that you'll see happen. Now, as Brendan mentioned, we're going to use the VXX here. That's on the BATS exchange, and I'm going to put it up against the SPY just so you get an idea of what we're looking at here. And this is just going to be a daily chart over the same time frame, May to currently where we're sitting here in mid-September. And I just want to point out, of course, when the VIX spikes upside here, that means there's a little bit more fear sentiment in the market, and then you can get these pullbacks. And one of the things you'll look at is look at some historical levels just here on the VXX, 35, 35. And then in July, the third time we tested this 35 level, you had the biggest spike in volume on that particular day. And then you followed with volume decreasing on the VXX and a hold of that 35 level. So fear spiked. Big time spike in volume right into a key level, and then you had a hard reversal. At that particular moment, you had the S&P 500, which had held, VIX had held this 35 level. The S&P had dipped a few times, or SPY here a few times, and then rallied. In this particular situation, it actually, and this is right here on the 20th, you're going to have this other dip into the 50-period moving average. And then the following day, we're going to make a big breakout through all-time highs a couple of days after that. And you just sort of see, we spike in the VIX, and when you have a hard reversal, you get the bounce over in the SPY. Now, one thing to keep in mind, this is not some kind of automatic indicator, but it should be used alongside other technical indicators. If you like buying off the 50-period moving average, you get a bounce there. You get a confirmation. You could maybe like the breakout, or you could like the second-day open trade, maybe buying it at the close. The key here is that a lot of times you will see that correlation. Now, I preferred this move because you had the spike in volume in the VIX. I think that's why you had a much cleaner bounce off the 50-period on the SPY, as opposed to a messier entry into the long side the previous time that the VIX had spiked on lower volume. So just one way you can use it to see those reversals from key resistance on the VIX to spot bottoms in the overall market.
So I actually have, I mean, that's the thing. So let's talk a little bit. This is the actual VIX, of course, on the CBOE, and this is the VIX. And you're going to see here just a monster spike. This is a weekly chart. So you're going to see a monster spike here in March of 2020, basically going from lows of $12 all the way up to 84 at its maximum there. And this is just over about a month and a half, 2 months here. Each one of these is a week, so you don't even have 8 of these candles in here. But there it is, a big spike to the downside. So what we're talking about here is, look, between 23 and 37 days are the options that are put on the SPX. So the S&P 500 and the VIX, basically the management team figures out the right put to call ratios. They got that going, and then as it spikes, that's the fear indicator, right? So the more the VIX spikes, the more the market's starting to go down. Not only that, it might not mean the market's going down, but it may also just mean that, hey, like right now, so that's the weekly. I mean, we can. I was going to talk about it all going backwards, but if you just go here, even to a daily chart of the VIX, we'll put this up, and then the market doesn't even necessarily have to be going down if and when this ever loads, which it may not load here, so that might not work. But if we go back, let me take this off the screen quickly here. If you look at the VIX that we're talking about, what Neil was talking about right now, if you go to the daily chart right here, you have these little spike up here because right now we're in a little bit of a downturn in the market. So people are buying protection right now with the VIX. And that's very, very important. It's just, that's the place. I mean, to take your last point there, Brendan, the point where to hide is you could actually just buy the VIX. Most people are long equities. So right now, as you see here, in the last couple days, if you just bought 24.25, we're on a little bit of a dip down here in the NASDAQ and the S&P, then, it's getting up to 27. So there's your like close to, 8, 9, 10% maybe if you get back up to VWAP there. So you're trying to hide out here. So if you're long some stock, you could definitely buy the VIX to hold that out. Historically, between 12 and 15 is a great spot, and my chart froze, but between 12 and 15 is where you want to buy the VIX to protect yourself against these inevitable spikes of fear in the market.
Not a traditional indicator, but in this case, guys, we're using the VIX as a way to confirm higher volatility, and in this case, the possibility of a sell-off. So if you're looking for and waiting for confirmation on, is this the actual sell-off, look for those key levels on the VIX. Might be a good way to indicate whether or not we're actually in a sell-off. Hope that helps, guys, and hope that gives you a little indication on when the market could be selling off. Here's Miss D.
Hey guys, thank you for this wonderful information. Dear viewers, please subscribe to this channel to see more great videos.